Welcome back to the channel. I hope all of you are having an amazing day. So we have to talk about one really important event coming up for Bitcoin and the entire markets. On top of that event coming out literally tomorrow, we also have some very important things to go over in terms of the data and the on-chain analytics for Bitcoin and the price, because it's telling us that we could see some potential medium-term volatility in the next couple months that could affect Bitcoin's price in a heavy way. And as always, before we get started, if you guys enjoy the content, make sure to go ahead and subscribe and like the video down below, as I really do appreciate the support. And also in the comments, leave down what you liked and what you didn't like and what you want for future videos. But let's get right into it. So this video is going to be packed with a lot of looking at Bitcoin's price in the short term because of the event coming tomorrow, which is the unemployment data. And on top of that, some Bitcoin on-chain analytics, which I think are going to be very vital in the next coming months, or basically until the end of the year. So to start off with the news, if you watched any of the previous videos, you know I've been talking about the unemployment data for quite some time, and we're going to jump in the charts and talk about why that's actually important. Now, this is actually going to come tomorrow, August 7th. As I'm making this video, it's only August 6th. And currently what they're pricing in is that previously unemployment for the entire United States has been at 3.7%, and they think it's going to stay the same. This is important because the Fed has been raising interest rates, which again pose a risk of a recession, but a lot of economists in the Fed do not consider a recession if unemployment is still low like it is. So if we start to see unemployment start to rise, that's when we could start to see a little bit more volatility and a lot more downside in the markets. So let's actually jump into Bitcoin's price, look at the weekly and the daily chart, and talk about what could possibly happen with this. So one of the big things that I want you guys to understand is that you have to look at the macro to understand, look at the bigger picture, at the bird's eye view, to understand what could possibly happen in the long term. A lot of people like to day trade on the 4-hour, the hourly, or even the 15-minute, but it's also very important to understand the macro side of things, what can happen in the next couple months or even possibly the next couple years. And this gives you a better picture of what Bitcoin's price might be doing, because it all is fractal, and whatever happens on the bigger time frames happens on the smaller time frames. But the big thing is that I want to show you guys this very important floor, because we talked about in our last video Bitcoin's potential bottom, and obviously worst case scenario is it does go to zero or continues dropping. But I think a realistic super floor is 12,000, maybe even 11,000. But if you look left, there's two really big indications for this. Right here we have pre-pandemic levels, again right around here, before we had that shot all the way up into the next bull market. And then this also served as a very strong resistance back in the day, almost 3 different touches on the macro scale, and then we broke out of it. Another thing that I really want to point at is this imbalance. Now, if you don't understand what imbalance is, it's basically unnatural for the market to go either up or down extremely fast. Typically in the markets, you'll kind of see like wave patterns, in an uptrend or a downtrend, something similar to those links. But when the market shoots up extremely fast, that's typically called an imbalance, and more often than not, it doesn't have to happen, but whenever you have a shot up or shot down in price will naturally just kind of fill in that imbalance, whether it's immediately or down the road. And with this imbalance not being filled, if you look to the right, we still have some time to basically fill this in. I'm not saying it's guaranteed, but a possibility. Now, another really important thing is that if we look at the macro downtrend on the daily, you can see that we've had multiple touches over here, and just as of recently, we've broken out of it. Now, a lot of people are saying that this breakout is going to be what pushes the bull market up, and we can maybe even see 25,000 or even 30,000 for the Bitcoin price. Again, I do want to remind you guys that these are just subjective trend lines that a lot of people are looking at, and just because it's a breakout, it could also be a fake out. So keep that in the back of your head. And of course, this has to come at a very specific date when you have your unemployment data literally coming the next day. So the next daily candle is going to be that unemployment data. And if you look at Bitcoin's price, it's been fairly non-volatile. It's been, just consolidating in this range. And typically when something consolidates for a long time, especially Bitcoin, like right around here, you tend to get a lot of volatility. So keep your eyes out for that and understand that we do have a floor, very strong floor right here at 17,000 500. So this red marker right here could signal possible volatility, which is what this whole episode is about. And of course, touching on the subject of Bitcoin and its volatility, if you look at the volatility over the past several months, basically 2021 of January, going all the way back, you can see that the volatility, which is the red line for Bitcoin, has been fairly stagnant. And something very interesting is that the S&P 500 has been way more volatile than Bitcoin, showing that Bitcoin is a little bit more stable. So on the good side, Bitcoin is showing fairly well in terms of recession fears and market downturns. It serves as a better asset and less volatile than S&P 500. But it could also mean that when you have low volatility, something like this, you could also get that massive spike to the up or the downside. Now, why are we talking about the unemployment rate? That doesn't have anything to do with the markets. That's just boring data. It really has no effect. To an extent, I mean, maybe, but in terms of the macroeconomic fears that are going on, typically this is a very good indicator showing that whenever unemployment basically tops out, that one indicates that we are in a recession, but two, you have to remember it's a very lagging indicator. And so whenever it tops out, typically the bottom has already happened months before. So let's just take a look back at some of the data. Back here in the early 80s, this is when it was basically topped out in unemployment. This was about 83, but the actual, bottom of the S&P 500 happened months or even years earlier. Same over here in the early 90s. This happened around 92, 93. But yet the bottom of the stock market was around early 90s. Right around here, the dot-com bubble happened in 1999, 2000, but yet unemployment was at 03, 2 years later. Right here, the Great Recession, October of 2009 was its peak for unemployment, but yet the stock market bottom was right around here in about the later stages of 08. Again, what we are seeing is that when we go into unemployment rate, they think it's just going to stay stagnant and it's not going to go anywhere. Well, if it continues to go up, that could be a signal that once, we get to around this point, just like all the others, one, unemployment goes up very fast, and two, that could be telling us that, hey, the bottom is in, because the markets are forward looking, but the Fed and the government is a lagging indicator. So we could be ahead of the curve. And since we have bottomed out right around here, this could be an indication that, the bottom is getting very close in these markets. And to kind of back up that data, as we look at the DXY, one very important indicator in terms of market strength, as the DXY goes up, then typically markets go down because they are inverse assets. As the dollar gains strength, more people are going to want to put their money in the dollar because it's going to get them better gains in terms of, investing in a bear market in any asset. And if we look on the weekly chart, some of the recent highs, well, not recent, back in the dot-com bubble or the 2000s, this is the height, right around 119 to 120 points. We're not too far off. The high of this was almost at 115, meaning we're only 5 points away from right around here reaching our recent highs. Do I think we can hit that area? Well, when we zoom in, we are in a pretty strong parallel channel to the upside, and you can see we've had multiple bounces here on the downside, right over here, as we've been just continuing to go up. And recently, the DXY has been dropping. Now, a lot of people are going to say that, hey, the DXY is dropping. It's time to start buying Bitcoin, getting back in. The bottom is in, blah, blah, blah. But what we can see is that maybe the dollar continues to fall and fall and fall. And then eventually, once we get to this lower or, up ascending parallel channel, that's when we get our final push, maybe to that 119, 120 basis points of right around where the DXY strength is. So definitely in the short term, maybe we can get some downside. But I think in the long term, I think we're still going to make one more push to the upside regardless. And one thing to sort of back up that data is when you look at the FOMC that's supposed to come out in November 2nd, this is telling us how much the Fed is going to raise interest rates. Now, if you looked at this chart just a couple of days ago, it was closer to a 50-50% of how much they're going to raise it by. And more people are thinking, around 71% of the market, as of making this video on October 6th, over 70% of people believe that we're going to get a 75 basis point rate hike, which again is going to be historical because we've never done it at this rate. And they're talking about a soft landing, trying to make sure we don't enter a recession. But when you're doing it, more aggressively than you have in history. And typically soft landings are not an occurrence in terms of raising interest rates and not falling into a recession. That typically doesn't happen. So honestly, what we're looking at is just them trying to fight inflation, and that's really their only main goal, even if it means pain for a lot of the people. And I think this is something important to realize, because when we look at the asset bubble, when you look at housing, stock values, and probably cryptocurrency added in here as well, this is the largest gap that we've ever seen in terms of, how many asset prices there are, around 81 trillion. And then you look at the GDP, which is only around 25 trillion. So this is one of the largest gaps that we've ever seen, basically, showing that we have an asset bubble. And just because we've seen a downturn in the markets, there's still room for a lot more downside. And kind of getting away from the macro markets and looking a little bit more into Bitcoin, one of the important things that we have to look at, which again we talked about earlier, is the hash rate for Bitcoin, because the miners are basically the backbone of the Bitcoin network. And a lot of what they're doing, a lot of their activity, a lot of their data can indicate what can happen to Bitcoin's price. Now, the first thing is that the hash rate has just hit a recent all-time high right around here at, I'm not too big on the numbers or understanding of, a lot of what that means, but basically down here you can see that it's equivalent to around 7.7 billion people guessing at the same time, which shows that, as the hash rate continues to rise, the security in the network has never been stronger. Another very interesting data point is if we look at the Bitcoin hash rate, that you take the 60-day average and the 30-day average. Anytime that the 30-day rises above and flips the 60-day, you can see that in terms of price, that has been a bullish indicator. So whenever it flips to the upside, you have a rise in price. Right around here, you have a rise in price, a rise in price. And just recently, we also flipped it, in between right around August, September timeframe. So could this be an indication that maybe the bottom is in and we are going to see that rise in price? Well, even though it is looking a little bit bullish, I do want to bring you guys to more charts and something to consider in terms of, maybe that might not happen as fast as we want it to. So the model that we're looking at right now is something that has been created recently. And the main point of this is to look at the maximum miner efficiency in terms of Bitcoin's price. Now, I'm not going to go too much into it, but basically one of the big things that you can see is that the maximum price efficiency is in between around 17,000 and 12,000, meaning if Bitcoin's price gets down to these levels, that's going to be very scary for a lot of these miners in terms of profitability, the hash rate, and what can happen in terms of Bitcoin's volatility. So you could see, again, as we look into the miner data or the hash rate data, again, we are seeing correlation between the prices of around 17,000 and 12,000, which is more validation showing us that we have that potential drop down to that zone. And one final thing I do want to point out to you guys is that, yes, while a lot of people might start to think that, hey, the bottom is getting closer, we're not feeling as much pain in the markets, one thing is that every single bear market, we have seen some massive capitulation from the miners and in terms of them selling. And you could see the averages around this green line. Whenever this happens, Bitcoin's price typically bottoms, and that's when we could see a bull market start to, form months later. And as you could see, this happens time and time again, not even in bear markets, but in major bottoms. And recently that hasn't happened. Even at this $17,500 level, we weren't even close. We were still a decent amount away from that minor capitulation. So are we yet to see that major capitulation? And if we do, if we see a lot of those miners start to sell off, that in turn would allow price to fall a little bit lower. So definitely something to keep in mind, because this definitely correlates with when Bitcoin's price plummets. It's probably due because of the minor capitulation, which again, in turn takes into this price of maximum efficiency, if that kind of makes sense for you guys. And to basically finish off on this, I know I basically have this entire article highlighted, but there are some extremely important points in terms of what can happen in the medium term with Bitcoin's price. Now, it says, amidst global chaos in the traditional markets, prices are remaining typically stable, which is an extremely rare thing for Bitcoin's price to stay stationary for so long. And basically what they're saying is that they're suggesting heightened probabilities of volatility on the horizon, which we've been talking about for weeks now. As Bitcoins become stable, that's typically when volatility is, coming right behind. And they also say by numerous models, we estimate that the average cost of Bitcoin production hovers just below the current prices, basically meaning any significant price decline could turn into an implied income stress, which again, if the income stress becomes a little bit too much, miners will need to sell to make sure that they balance out their balance sheet, become profitable. And again, that comes with that miner capitulation that we were literally just talking about. And lastly, it's literally just talking about this. It says the risk could manifest as a second stage miner capitulation with around 78,000 Bitcoin still held in miner treasuries. Now, they're saying it's extremely unlikely for that full amount to capitulate, but it is a possibility. And 78,000 Bitcoin at the price of 20,000, them falling down, that's billions and billions of dollars. So definitely something to keep in the back of your head. But that is everything that I have for this video. If you guys did enjoy it, if you did find anything educational from it, I would really appreciate if you guys could subscribe and like the video down below, as it really does help out the channel. And again, in the comments, let me know what you liked and didn't like about the video. What can we do better? And what do you guys want to see for future videos? But until the next one, I'll see you guys then. Peace.